Welcome back. You're with us on Trading Hour. Time to introduce our next guest. Stefan Hofer, MD and Chief Investment Strategist at LGT Bank Asia, is with us. And he's joining us on an interesting day when we've just heard from the Indian Central Bank, and the global conversation is all about these high U.S. yields and the high dollar. Stefan, welcome to the show. Let's start with your broad thoughts on how markets are assessing the moves in the U.S. bond market, and whether you think there could be some major twists and turns or perhaps even accidents around the corner.
I'm not sure accidents is quite the right word, but absolutely, yields are at very high levels, and they could move a little bit higher from here. Of course, again, today we have a very important moment with the non-farm payroll report, and paradoxically, if job creation is stronger than anticipated, that will actually probably cause the market to sell off and become once again worried about inflation risks. Now, that is not our baseline view on the situation. We still think the United States is quite nicely in a disinflation path. That means rates will go up maybe another 25 basis points from here and then go sideways. But really, markets, again, very focused on today's labor market report, looking for unemployment around 3.7, 3.8%.
Stefan, we've already seen the U.S. markets correct about 7 to 8% from their peak levels in a span of 2 months. Do you get a sense that we could see some more of a price correction in the global market?
If we have a situation whereby investors really begin to fear that U.S. inflation is going to reaccelerate, then I would have to say that there's further downside risk to the U.S. market. On the other hand, if we are in a situation whereby the job market sort of cools gently and oil prices can come down, and there's more confidence that core inflation is actually continuing in its disinflation path, then actually I would say that the current setback is a good buying opportunity.
On your base case scenario, in which the U.S. markets are in a nice disinflation glide path, you think the U.S. markets are well positioned and we may have put in a bottom just in the near term for the U.S. markets?
Absolutely. And I mean, at the end of the day, we have to bear in mind that the U.S. market is a low beta market with a relatively good visibility in terms of earnings. So when you construct a portfolio, we still recommend for international investors to have quite a sizable block in U.S. equities as a structural component.
Okay. Stefan, let's get your view on India. Where does this market figure in your scheme of things? What are you telling investors about India?
Well, we have to recognize first and foremost that international investors are increasingly very excited about India. So the combination of structural reforms plus the ongoing boom in infrastructure, this means that, maybe valuations feel that they could be a little bit high right now, but investors are looking through that basically on the idea that the next 3 to 5 years could see a structural uplift in terms of India's potential GDP growth rate, and that makes it still a very good buying opportunity right now.
But the FPI, foreign portfolio investors have actually been selling in India over the last 1 month. So this long structural India story has been playing out for a while now, and it appears to be petering out just purely based on flows.
Well, once you have these strong runs, then there's always the temptation to do some profit taking. But when we discuss with really, very long-term oriented investors, they're still very keen. Of course, there's an election around the corner, and there's some other issues regarding the currency because of very high oil prices, etc. But again, I think the structural story in an Asia context, especially when you consider that China is slowing down, maybe less opportunities in other parts of the region, India stands out in that regard, and investors, I think, still are going to be very keen to go back into the market.
Stefan, I don't know if you've had a chance to study this market in more detail, but since you have a structurally positive view on India, what do you think investors should get in over here? Would it be technology, banks? Actually, a lot of the large, big private sector bank stocks have not done that well. It's been more of the companies linked to government capital expenditure, spending, infrastructure. What do you like in India?
Yeah, so the first port of call is going to be the infrastructure-related names, just because that's where a lot of the excitement is, and that's where I think, in very blunt terms, that's very tangible. So you can really see the progress on the ground in the major cities in that regard. But for the majority of international investors, a lot of them are coming to the market with very little experience and very little allocations, if any, at this stage. So for the most of them, a fairly straightforward ETF or fund type position to get to broad access to the market is probably the most appropriate at this stage.
Okay, all right. Stefan, thanks very much for your time. Good speaking with you. Appreciate you joining in with all of that perspective. It's always good having you here on CNBC-TV18. Well, you know, you got the market